Welcome to the Meta Business Podcast. The Metaverse and Web3 are bringing about the biggest revolution since the internet itself. With your hosts, Paul the Prophet Dawalibi and Jeff the Juice Cohen, we will be bringing you the latest Metaverse business news and insight into what it all means. The Meta Business Podcast starts now.
From the boardroom to the metaverse, this is the Meta Business Podcast. I am Paul Dawalibi. I'm joined today by my friend and co-host, Jeff the Juice Cohen. For those of you who are new here, welcome to the official podcast of the Metaverse. What we do is we cover the most pressing Metaverse news from the week, but we look at all of it through a business and C-suite lens. We dissect, we analyze the business implications of everything happening in this Metaverse space. If you're a regular listener, thank you for tuning in every week. This is episode 13, lucky 13. We really appreciate it. If you've been a listener from the start, if you haven't, no problem either. Make sure to rate the podcast, leave a 5-star rating or review if you love it, share it with your friends. That's how other people discover the podcast. Jeff, how you doing this week?
I'm doing good. It's another week here. We got a lot of news. I feel like every week, I always think it's going to be hard to find stories, and it's almost like it's you don't even have to try. We're talking about them in our Discord all week, and it's kind of there's always stuff. And that's why this is the best half hour of my week typically.
Good reminder, by the way, if you love discussing Metaverse stuff and you love the podcast, make sure to join our Discord. We have a community Discord. It's discord.gg/metatv. It's all kinds of gaming, crypto, Metaverse news, discussion in there, and some off-topic stuff as well, obviously. But great community in there, so make sure to join. Jeff, you're right. The Metaverse, arguably the crypto side of the Metaverse, was really in your face if you even had a pulse this weekend, Super Bowl weekend, obviously. I figured we'd kick off with this kind of fun story talking about all of the crypto sponsors of the Super Bowl. And this article came out before the Super Bowl actually happened. We're now recording after, but it says crypto ads set to invade Super Bowl 56. The massive sports marketing push by crypto companies has never been as evident as it will be on your TV during Super Bowl 56. And it lists a bunch of the different companies who activated. FTX, $32 billion company now, crypto derivatives exchange, crypto.com, Coinbase, Binance, FTX, and it says here FTX and crypto.com may not be the only names we see in the Super Bowl. Obviously, there was a ton of crypto advertising. The Lakers play in the crypto.com arena, right? There's a lot of mention of activations, obviously, outside of just the Super Bowl. But are you surprised that the Super Bowl was sort of infested with crypto advertising?
No, not at all. I mean, these companies have so much money, and it's a little bit of a land grab with a lot of these platforms. So it makes sense that they have the dollars to get out there, and where better to spend them than the Super Bowl, where everyone's eyes are on it. I think I tweeted this week that it was a little bit reminiscent maybe of the .com era, where you sort of saw a lot of these .coms spending money, maybe frivolously or foolishly on Super Bowl ads. So hopefully that's not the case, where this sort of represents the top or a near-term top in the market, just symbolically. But yeah, no, I think it makes a lot of sense. I'm curious which one. I guess I have two questions. First, which one was your favorite? Because I have one in my mind.
I think it was so I'm not a big football guy, so I didn't really watch much of the Super Bowl. However, I did think I think it was crypto.com that did the one with LeBron.
Yes. So that actually was my third favorite of the three. So the
Which
two that I think
was clever because it involved like a younger digital version of LeBron, which I thought, the techie in me appreciated that.
Yeah, I wonder if that was built in like a game engine. It looked like it was almost like built in Unreal or something.
But the tagline was clever too. I think it was something like "Fortune favors the bold" or something like that.
Yeah,
it was clever. Sorry, you were
the
saying
other
your favorite.
the two that I feel like people were really buzzing about. The first one that got a lot of attention was the one with the the flashing around the screen. What is it? The QR code. It was a Coinbase. Basically, the whole ad was just a QR code flashing around the screen,
broke the internet.
It broke the internet. I guess my question was to you: do you think that was on purpose? Because I saw a lot of tweets back and forth, like, "Oh, this is such a bad thing that the website went down. It shows how would you want to give your money to them? Like they can't support the load. Like did they not expect this?" Almost like what you hear when a game launches and the servers go down. And I heard other people say, well, no, it was they obviously planned for this out. It was like they wanted to show how much demand there was. And oh my God, like everyone's doing this. So which side of the fence do you sit on?
I'm definitely in that second side there, because ever since Apple started putting lines outside their stores for a new iPhone launch, like I knew this was all very purposeful. This is marketing, right? You want to make it seem like something's in massive demand. I don't think for a second this happened. Like these companies are not stupid. They know they're going to get the money huge scale traffic. Yeah, right. Like you plan for it so your site doesn't go down after your Super Bowl ad. If the site went down, this was planned. The question I had for you, Jeff, is, and we're probably spending way more time on this than I think we originally thought, is what is driving it? Is it that the crypto companies believe that there is significant, because I've asked you this question in the gaming space, but do the crypto companies believe there's significant overlap between crypto interest and sports fans or football fans specifically? Or is it that they just see the Super Bowl as like, here's how we reach the mainstream and just get in front of, like, what other way can you get in front of 100 million eyeballs like this quickly?
In this case, I think it's definitely both. I mean, it's the most mainstream sort of best way to get your brand in front of 100 million plus people very easily. So I think number one, it's that just get the best way to get in front of a ton of eyeballs. It also is a little bit of a signaling effect. It shows, hey, we're so real. We have so much money that we're able to spend this $7 million it is to get that 30-second ad. Having said that, we have seen a lot of data, and we've talked about this in the past. There's a massive amount of overlap between crypto enthusiasts and sports fans, and actually also esports fans as well, to kind of tie this to gaming. But we've seen a ton of deals between athletes, crypto companies naming arenas, sporting arenas. So there is definitely data to support that. And before we move on, I will say the number one ad that I liked was the Larry David FTX ad, because it was hilarious. So if you haven't seen that one,
although I love Larry David,
like Paul, you should check that one out because it was the funniest ad.
I do love Larry David, so I'm sure it was. I have no doubt. Let's move on, Jeff. Let's talk about two companies that have announced, or at least made moves into the metaverse space, or stated that they want to make moves. And these are two, call it tech or media companies. The first here, huge announcement, I think, is from Disney. Disney said, the headline here is Disney appoints executive to oversee metaverse strategy. So this guy, Mike White, has been essentially tapped to lead the firm's metaverse strategy. He's been with Disney for more than 10 years. He's going to oversee a team that includes senior leaders, according to this article. And the CEO of Disney has said that the metaverse is the next great storytelling frontier to be explored. So I'll just put one more quote from the CEO of Disney here. He says, he described the metaverse as a perfect place to pursue our strategic pillars of storytelling excellence, innovation, and audience focus. Teams across the company are exploring this new canvas, and I've been blown away by what I've seen. The one question I have for you here is, and maybe I'm being too critical, and obviously we're bullish on this podcast about the metaverse, no question. But he could literally be talking about gaming, and all of these quotes would still be applicable, right? Why aren't they doing more in gaming if they think like gaming is a pillar of storytelling excellence, innovation, and audience focus, right? It's a new canvas for them. Like, why are they not doing more there, but yet seem to be giving more lip service to the metaverse? Do you have a thought on that?
You're 100% right. And this was literally the first thing I thought when I read this was, why are they creating a metaverse strategy and not starting with a gaming strategy? And I've talked about this numerous times. I don't know about on this podcast, but definitely on our sister podcast, Business of Esports, and the live stream we do. Disney is the perfect gaming company that isn't a gaming company currently. Now, I know the history there. They've gone through fits and starts where at times they did build games internally, then they outsourced them. Bob Iger famously didn't want to be involved in gaming. And I think it's been just a massive miss. Now they're getting some revenue from the deals they've done with EA for their properties like Star Wars. They've done some other licensing deals to a lot of mobile games, stuff like that. But the fact that they don't have a gaming strategy in house has been just a massive strategic blunder. When you look at what Disney is and the IP they have, and just the fact that they are a media company that really does storytelling pretty much better than anyone else, I would argue, with what they've done with Star Wars, Marvel. You could name 10 other franchises or IPs. It is almost inconceivable that they're not bigger and don't want to be more involved in the gaming space. So to me, when I saw this, it almost made me angry that they're sort of just paying lip service to the metaverse without making it more of a broader gaming conversation. Now, if this is the first step towards Bob Chapek, the CEO of Disney, having a different view on gaming to what his predecessor had, then I can understand that. And maybe we're going to see large acquisitions. I've heard a lot of times Disney would make sense to buy EA because they own ESPN. EA obviously has the sports titles, plus Star Wars games are built by EA. Boom, there's a lot of synergies there. So maybe that's the next move, and you and I will sit back and kind of applaud and say, hey, that this was part of a bigger strategy. But right now, to me, even though the metaverse is a massive opportunity and maybe one day transcends gaming and actually is the bigger opportunity, it seems to me like you need to crawl before you can walk, before you can run. And this is Disney trying to run before they can walk. And, promoting a guy who, seems to be a longtime Disney executive. I'm not sure if he even really has any experience in gaming to quote unquote run their metaverse strategy, to me is just simply not enough. And I realize I'm going on a little bit of a rant here. I want to start with that, get your opinion on that. And then I think we should talk about the broader, like, what should Disney's metaverse strategy be? Because I do think there's a massive opportunity sort of in this digital theme park type space where, yeah, it gets me excited, but I'll stop there and let you kind of cover the first part. Maybe.
I agree with everything 100%. The question I had for you to sort of, instead of, I have a question more than a comment really, is the lack of a gaming strategy at Disney, because they have lacked one. Does that hurt them when it comes to the metaverse, right? Do you think because they don't have gaming expertise in-house, like people with really deep experience and knowledge, that trying to build out a metaverse strategy, they're starting from a disadvantage almost? Like, do you feel that it hurts them, or is it a clean slate?
No doubt it has to hurt them. I mean, they don't have the internal expertise in terms of just what you would need, like developers and coders, a game engine. Like, in order to be a serious player in this metaverse conversation, Disney either needs to buy someone like an EA or someone like a Unity or Epic. I mean, I just don't see any other way around it. They don't currently have the developers internally to build it, because they're not going to build the pipes behind it, like the actual infrastructure of the like the platform, because they don't have game developers, and they're not going to build games because they're currently not in that world. So that while they do have the IP, and I fully believe that they have the DNA to build great stories and great games, it's not currently something they're doing. So I don't see, unless this is paired with a massive hiring push, what they can possibly do. And we know from past episodes, metaverse developers are incredibly expensive. Game developers are massively expensive and in demand currently. So I just don't see much coming of this. And I do disagree.
No, Jeff, and I think your second question was a good one, which was, what do they need to do to be successful in the metaverse, right? And your buying of EA, I think, is an interesting thought. You and I have, talked about this previously, and I agree wholeheartedly that it makes sense. The sports games, the whole bit. But I think you just mentioned another one, which I think would be allow them to catch up, at least in terms of being behind and allowing them to make up time, is is Epic, right? Epic has family-friendly games. They have the engine. It feels Disney-ish. Tim Sweeney, for all of his genius and what he's created, I think needs kind of the stability and good management of a Disney to shepherd those properties, to long-term success.
Mm-hmm.
And so, to me, that makes a lot of sense. If you're asking me, what does Disney need to do to be successful here? And they tip their hat a little bit. I want to read this one piece of the article here where it says, Disney said it sees the metaverse as the next evolution of its almost 100-year-old storytelling tradition. And this is a quote from Bob Chapek. He says, today we have an opportunity to connect those universes and create an entirely new paradigm for how audiences experience and engage with our stories. And I think the quote's interesting, and the conclusion I draw from it, even though it may seem far-fetched, is Disney never understood gaming, but they understand the metaverse because, as you very insightfully pointed out, it's like a virtual theme park, right? We can create a stop for Toy Story, a stop for Marvel, a stop for Disney, right? Like it conceptually, the metaverse seems more familiar to Disney than just gaming on its own does.
That's actually a great point. I hadn't thought, where it's like you could have the Disney metaverse basically be a Disney theme park, and each thing could be either a ride, a gaming experience, some different IP that you're interacting with. I mean, it makes all the sense in the world. Another point on the Epic, maybe them acquiring Epic, there is a track record of visionary sort of founders selling companies to Disney, right? You had Steve Jobs famously sold Pixar to Disney and became their largest shareholder. So, maybe Tim Sweeney sees that and says, hey, maybe I follow in Steve Jobs' footsteps. We know Tim Sweeney has a big ego, so maybe he gets some enjoyment out of that.
And that's like about the same ballpark from a valuation, like in terms of the size of the buy, right? EA or Epic, probably the same, right? You're talking 30, 40 billion in that range, something like that. I think that would be it's an interesting one to watch what Disney decides to do. I just want to put this next to another story, though, which is, I think there's a lot less here to dig into, but they go together, in my opinion. And this is the headline here: YouTube is embracing the metaverse, starts with gaming. So slight difference here, right? Where YouTube is looking at the metaverse from a gaming standpoint. And they're quoted here as saying, this is the chief product officer. He says, we're thinking big about how to make viewing more immersive. The first area in which you can expect to see an impact is gaming, where we'll work to bring more interactions to games and make them feel more alive. It's still early days, but we're excited to see how we can turn these virtual worlds into a reality for viewers. The other part of the article just says that they announced their commitment to the metaverse, and they want to inject a new level of immersion into YouTube entertainment. It says their exact plans are unknown, but they're going to start with video games. What do you make of that, Jeff, compared to sort of the Disney announcement?
I don't know about comparing it to the Disney announcement, but this all kind of confuses me. It feels like they threw together like a big buzzword soup. I'm interested a little bit in this concept of immersive viewing. Like, it got me thinking maybe there's a world where you're watching streamers and then all of a sudden you can kind of enter their game and you can have your own controls. So you can kind of be walking around their game and sort of interact with them maybe. And to be honest, that's a little bit, I think that was what was pitched with Stadia, right? There was I think it was called Stream Connect, where like basically that's what they were pitching. So maybe eventually we get to a world where that happens, because that's the only thing I can think of when I think of immersive. What is immersive about watching a YouTube video currently? Nothing.
Nothing.
So maybe there's some element to that, like you can jump into someone's actual stream. Short of that, I don't really understand what they're talking about when they're talking about a metaverse with YouTube, right? It's just like the two things are not the same.
I mean, I really don't think YouTube understands. This is the problem when you have such a good business. It's like it's an $8.6 billion revenue business that requires almost no effort whatsoever, right? Like people aren't going to stop watching YouTube or posting on YouTube. this felt like such lip service to the metaverse to me, and just a fundamental misunderstanding of what it felt like the Stadia announcement all over again. We're going to create the future of gaming. We're going to like a lot of talk. Oh, you will see probably no follow up. I think it's much more interesting to see where Disney goes with this than YouTube, right? I think YouTube and Google likely not even part of the metaverse conversation at this point. I haven't seen anything of any substance from them so far. And Google just isn't as acquisitive as like some of the other companies, right? I don't see them making an acquisition to get them sort of jump started in gaming or the metaverse in any way. Do you?
No, I don't think so. I think you're right. I think the more likely, people would even Apple, probably Amazon, Apple, Facebook, clearly, if they could get past antitrust. Microsoft's already done a big acquisition, and then you could throw Disney, I guess, into that camp as well.
Let's switch gears, Jeff, to Wall Street, because Wall Street also made metaverse news this week, and there's two articles which I'll put them together. But the first here is Wall Street's metaverse dreams take a hit, and this article is talking specifically about Roblox, whose stock was down 16% as of today.
Actually, went down more than that. I think it was as much as 28%. Probably when this was written, it was 16. But yeah, it was a bloodbath.
Well, and that's in spite of daily active users hitting almost 50 million, which is up 33% year over year. And I think their bookings, like in terms of how much Robux they've sold, like also hit an all-time high. Like the fundamentals, the growth seems to be there. They just missed analyst estimates in terms of earnings per share, right? I think that was the big.
Yeah, there was a little bit of basically what's happening is they're lapping tough comps because of last year was peak COVID. So if you look at them on kind of a 2-year stack, they're growing massively, but they, especially in North America, I think their North America daily active users declined. So people were concerned about that. And then their booking, they actually give monthly numbers, which is very rare, but they said their numbers for January, North America DAUs were down again, and then their bookings, which is revenue, so their revenue was only up 2 to 4% in January year over year. So I think that deceleration kind of always scares Wall Street. But needless to say, the long-term story is still very bullish. They're up over 50 million daily users, daily active users in January. So, we're talking about a business that's basically tripled in terms of its user base over the past 2 years. Obviously, you're going to face tough comparisons when you're growing that fast, lapping it the next year. But there's a massive runway here. I mean, and they talked about kind of 3 big pillars in the earnings call that I thought were pretty interesting. First, pillars in terms of growth pillars. First one being international, kind of getting bigger internationally, kind of growing the platform that way. Second, aging up, which is something we've talked a lot about vis-a-vis Roblox, meaning increasing the average age of players, having either people stick around longer and not aging out of the platform, or attracting an older crowd to the platform. And then the third being attracting different experiences, so more like immersive core games and other just types of experiences. So I thought that was all interesting. But yeah, it was a pretty bad day as a Roblox shareholder to see that happen.
Well, we're still talking like a $31 billion market cap or something like that. Meta also took a plunge this week, right? I think they're down. The article mentions 34% this year. And, it seems like the pivot to the metaverse or to Meta, like, I guess where I'd love to ask you is there some amount of fatigue around conversation around Meta in the public markets where the hype has subsided a little bit and prices are coming down to normal? Or is it that fundamentally investors don't agree with the direction?
I think it's definitely not the second. I don't think it's the second. I don't think it's that, hey, people just don't buy into this concept. Maybe people are, I think the mainstream is probably still very skeptical of this sort of like capital T, capital M metaverse. But I think the concept of people spending more time in virtual worlds and these worlds having vibrant, robust economies is, I essentially just described multiplayer gaming. That nobody doubts that. That's certainly happening. I'm tempted to say that a lot of these are sort of like idiosyncratic events where Facebook got hit by sort of advertising issues with Apple, and Roblox is just lapping tough comps, and sort of like that. That's what's led to the decline. But that decline is definitely leading to a little bit of, I'll call it metaverse malaise, maybe to create a term, where you are seeing people start to like roll their eyes a little bit, or maybe like get fatigued a tiny bit with the buzzword of the metaverse, just a little bit. I don't know. Have you kind of come across that as well?
I mean, not really. Like even in the echo chamber of, call it metaverse and gaming and crypto kind of world that we live and breathe in every single day, I just don't think we've hit peak yet whatsoever. Like my guess is we're still like a year or two away from kind of peak hype cycle. I truly think a lot of it comes from the fact that it's still a big question mark for a lot of the mainstream. Like the same in the early days of gaming and esports, same as in the early days of any other sort of technology life cycle. There's just question marks. There's education that has to happen. It needs to start to feel real to people, right? Like, and we're just not there yet, right? Like the whole Meta thing is Facebook's transition to Meta, really, other than the name change, hasn't happened yet, right? People still go on Facebook and use Facebook in the same way they always have, for the most part. So I just think it's not real for people yet, and that may hurt these companies in the public markets for the next year or two, right? Until a lot of this stuff's for just your average Wall Street analyst is like so much easier to feel and touch and see. But I chalk these things up to sort of short term and probably other forces at work. Not really anything fundamentally has changed about the upside or the potential here. I will say Wall Street, though, sort of seems conflicted, if I can say that, because the other story I wanted to put next to this one was this one, which is JPMorgan. It's called, one of the pillars of Wall Street. JPMorgan, the first bank into the metaverse, looks at business opportunities. The subheadline here says the Wall Street Bank has opened a lounge in blockchain-based Decentraland. They unveiled it. They called it the Onyx Lounge. The name refers to the bank's suite of permissioned Ethereum-based services. They released a paper exploring how businesses can find opportunities in the metaverse. They say they're getting a lot of client interest to learn about the metaverse, which is sort of the point I made earlier. And they put together a white paper to help clients cut through the noise and highlight what the current reality is and what needs to be built next in technology, commercial infrastructure, privacy, identity, and workforce in order to maximize the full potential of our lives in the metaverse. So, JPMorgan thinks that all these values are going to go up, right? They're bullish on Decentraland, Sandbox, crypto voxels, all these kinds of land platforms, and bullish on DAOs, DAOs. What do you make of JPMorgan sort of throwing their hat in the ring here, Jeff, and almost putting a stake in the ground and saying they're bullish on the metaverse, they want to educate their clients on the metaverse, and they're sort of willing to put I don't know if it's their money where their mouth is, but having a presence of their own in the metaverse. And maybe sort of my second minor question is, do we need banks in the metaverse? Like, does Decentraland need a JPMorgan branch?
I mean, to answer the second one, I think the answer to that is probably yes. Okay. I made a joke. I think it was on Twitter or on Discord when I saw this, where it was, are these banks going to be giving metaverse mortgages? I mean, we've covered land in the metaverse so much, like, and I say it jokingly, but at the same time, it's sort of serious. Like, am I going to be able to take out a mortgage to buy land in the metaverse? In theory, that will definitely be the case, but I don't know if we're there yet.
Will you go to a branch in the metaverse to take out that mortgage?
Why not? I mean, at this point, why not? But to your first question, I sort of also laugh at that because having worked at an investment bank. My first couple of years out of college, I worked at Barclays. For those of you who don't know, I just thinking to myself, like, who even at the bank, like, who came up with this? Was it, Decentraland approached JPMorgan? Who did they go to? And who's actually building this? Like, does JPMorgan have game developers on staff, or presumably, I'm sure they contracted with, an outside
Like a
party or something
marketing
like that. But yeah,
agency
it's fascinating kind of to see this, and good on JPMorgan for sort of taking the initiative and having this thought leadership, because you can bet that their high net worth clients are incredibly interested in the metaverse and crypto. 100%.
Does it change the math, you think, for these banks? If because all these banks, whether it's JP Morgan or otherwise Bank of America or Chase or whatever, right? They've all been built on real currency, fiat currency, right? Like US dollars for the most part, and transacting in those currencies and lending in those currencies. And right, like, do you think if we believe crypto is the currency of the metaverse, will there be regulatory issues with these banks starting to operate there and providing services there, but in crypto? Like, are we going down a path where at some point the long arm of the regulatory law sort of starts to take notice? Right, because you and me can launch a service, right, in the metaverse, dealing in crypto. No one's going to notice, right?
Yeah.
JPMorgan launches a bank in Decentraland, and if they're dealing in crypto in some way, does someone notice and go, wait a second, maybe we need to regulate this?
I'm sure the answer is yes. I am definitely not the right person to be asking about, banking regulations and the banking laws, but you can bet that, when JPMorgan is doing something like this, one, they pay compliance people a lot, so I'm sure they've thought about this, and two, the regulators are going to notice and be knocking at their door pretty immediately. So you could bet both those things already happened. So yes.
Jeff, I want to make sure we have time to get to this last story because I think it's an interesting one. And the headline here is from GamesBeat: Salad Ventures, which is I think that's a horrible name, by the way, raises $13.5 million to build Guild OS platform for P2E, that's play to earn gaming. Let me try and explain this. So what they're trying to do here, it's an operating system for managing a play to earn guild. So the idea is that anyone will be able to use the platform to start, manage, and scale a play to earn guild in any blockchain game. So the idea is to simplify guild management, help make it be profitable, etc. I will also mention investors included, like some of the ones I recognize: Polygon Studios, Winklevoss Capital, Gemini Frontier Fund, like some really great, crypto investors, mostly, it seems. Curious what you think of this, Jeff. What do you make of, I was recently on a panel about play to earn gaming. I'm sort of bearish on pure play to earn gaming because I think people play for fun, not to earn. That's a longer conversation. But like, what do you think of a platform for guilds?
So I could take this in two parts. First, I mean, my views on guilds, I haven't fully formulated like a perfect investment thesis, but just in general, I'm somewhat bearish on any game that requires a mortgage effectively to start playing it. I just think it's a massive, like, if I have to take out a loan to start playing your game, I'm probably not going to do that. It's just a really bad process, an onboarding process, and it creates a massive barrier to entry to people who are trying to enter your game. And maybe guilds fix that, but I kind of feel like that's a little bit of a bug, not a feature of play to earn gaming, where it's like, it just creates a really bad onboarding experience and user experience. Putting that all aside, if guilds are sort of here to stay, which again, I don't know if I necessarily believe that. I think eventually games will probably insource their guilds and maybe do some sort of lending to players when they first start, so they don't have to outlay the money. So sort of taking what a guild does currently and just having it be part of the onboarding experience and be owned by the game and by the publisher. So that's my sort of view on that. But taking that as, if that doesn't happen and guilds are here to stay, this is really smart, because currently I'm not entirely sure how guilds are managed, but I imagine it's a lot of Discord. It's probably a lot of different systems, Telegram, just general like blocking and tackling. And something that automates a lot of that is like a OMS management system for guilds makes a ton of sense. So I like the investment. I'm just not sure if I love the ecosystem. Like, I don't know if the ecosystem is super sustainable.
I agree. I mean, there's always this risk of disintermediation. And this panel that I was on this past week, like someone made, I thought which was a very smart comment, which is like Axie Infinity, the biggest mistake they made was not just managing the guilds themselves, like opening themselves up to external guilds and not having that in-house as a service was like leaving money on the table, basically. And it seems like that's the likely path I would assume most take. It's hard to say, because I do see the benefit of an external third party that does this. I see the benefit to the user and also potentially to the games who don't have to worry about this, right? There's a resource out there for players who want to start guilds and manage guilds, and you don't need to worry about any of that. But it does feel like if they are lucrative in any way, which they are clearly, that the games themselves would insource this, would include it as part of the feature set they offer. And anything where you become like a middleman, which this sort of is, feels like it could be disintermediated away. Where I'm I think much more bullish is I love the idea of capitalizing on the explosion in play to earn and providing services and infrastructure to that space, right? If you're bullish on that space, it seems one of the smartest ways to go, other than making a game, is figuring out how to interface with all these games. And so yeah. I'm a big fan there.
I guess the other bull case I would mention, just to play devil's advocate on, because I was a little bit bearish on guilds, I guess it's basically a community that can go to different games and almost like become a kingmaker, where it's like the guild decides, hey, we're going to go play this game, and this game's going to become popular because we're bringing our 50,000 guild members and we get to buy the stuff first. And then it becomes popular because we started using it. And then, you kind of like.
But you could see how the guilds, if they become kingmakers, could outgrow the usefulness of a platform that may take a cut of their earnings, for example.
Yeah.
Right? Yeah. Like if you realize you're so influential and every game is courting you, or you can move from game to game and make a ton of money. Why give anything up to a platform if you can self-organize in some way? I guess that's also a potential risk. And you may end up with just more of the long tail, like not the very biggest guilds or not the most powerful. But given the set of investors, clearly there's a lot of understanding of that crypto space. And I think a big challenge is the interoperability, right? If you truly can go make a guild in any game, regardless of that game's own interests, right? Whether they want you to or not, there could be value there to the player.
Yep.
Guys, on that note, that wraps up this week's episode 13 in the bag, lucky 13. If you love the podcast, make sure to go leave a 5-star rating or review. Tell others about the podcast. Share it with your friends. Jeff, thank you as always. We have so much fun doing this, and we will see you guys next week.
Thanks for joining us here on Meta Business. Make sure to subscribe to this podcast everywhere you get your podcasts, leave a 5-star review, and tell your friends, family, and colleagues all about us. Also, make sure to follow Meta TV on all socials to get more of the best Metaverse content anywhere. Tune in every week for another episode of Meta Business.